Hello everyone. Welcome to my YouTube channel Indian Bull vs Bear. In today's video, I'll share my analysis of historical trends of the plantation and plantation products sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. So the plantation and plantation products sector in the Indian stock market comprises of companies engaged in cultivation, harvesting, and processing of crops such as tea, coffee, rubber, spices, cashews, and other plantations. These companies are also involved in value addition, packaging, and exports of plantation products. The main growth drivers for the companies of this sector include rising domestic consumption, export opportunities, and value-added products. The government supports this sector with schemes for promoting organic farming, spice exports, and plantation crop diversification. The main challenges that the companies are facing includes weather risks, price volatility, labor costs, and quality concerns. So now in order to identify trends in this sector, I will present two graphs. They are the end result of my analysis of the share price movements of the last 10 years of top 10 companies of this sector. The top 10 companies of this sector comprises of one large cap, one mid cap, and eight small cap companies. The first graph will be the yearly returns graph, whereas the second graph will be the monthly returns graph. So let's start with the yearly return graph. So here is the graph. The green bars here shows the positive yearly returns. The red bars shows the negative yearly returns in percentage. The orange line down here shows the cumulative returns. The green line shows the number of months with positive returns, whereas the red line shows the number of months with negative returns. So let's start with 2015. 2015 was a decent year for the sector with average returns of 10.67% with 8 positive months and 4 negative months. 2016 was again average year for the sector with 6.77% returns with 7 positive months and 5 negative months. 2017 was a very good year for this sector with average returns of 68.61% with 7 positive months and 5 negative months. But then 2018 and 2019 were very poor years for the sector. In 2018, the sector gave average returns of negative 23.06% with 10 negative months and only 2 positive months. In 2019, the situation worsens and the sector managed to give negative returns of minus 35.53%, again with 10 negative months and only 2 positive months. But in 2020, the year when COVID hit, the situation turns on its head for this sector, and the sector gave very, very, very good returns of 92.14% with 8 positive months and 4 negative months. In 2021, the good show continues, and the sector gave returns of 87.91%, astronomically good returns, again with 8 positive months and 4 negative months. In 2022, the sector gave good returns of 23.53%, but this time 7 months gave negative returns and only 5 gave positive returns. In 2023, the situation improved further and the sector managed to give average returns of 48.55% with 8 positive months and 4 negative months. In 2024, the sector again gave very good returns of close to 61% with 9 positive months and 3 negative months. So, all in all, last 5 years uh, seems to be very good for this sector. Let's check out the cumulative returns. So, if we follow this orange line over here, and it shows us in last 10 years, this sector managed to give returns of approximately 950%, which is almost 10.5x in last 10 years. So, decent returns. Let's see the takeaways. First, again, the same thing, cumulative return 953.67% with which is approximately 10.5x. CAGR of 26.55%, a very good CAGR, I would say. over the last 10 years. Net negative yearly returns 2, not too bad, not too good, with 2 net negative yearly returns years in the last 10 years. The best year was 2020, the COVID year. So this sector performed really well in that year with 92.14% average returns, 8 positive months and 4 negative months. The worst year was 2019 with negative returns of minus 35.53% and 10 negative years and only 10 negative months and only 2 positive months in that year. Positive negative year ratio is 4 is to 1, so a good value for the sector. Only 2 negative years in the last 10 years. So that is the ratio is 4 is to 1. That is 4 positive years against every one negative year. Let's move on to the next graph, which is the monthly returns graph. Here it is. The green bars here shows the positive mean monthly returns. The red bar shows the negative mean monthly returns. The green line shows the number of years with positive returns, whereas the red line shows the number of years with negative returns. So January over the last 10 years has given an average returns of 1.61% with 5 positive years and 5 negative years. February, a very weak month for this sector with average returns of negative 2.90% with 7 negative years in the last 10 years and only 3 positive years. March, again, a very weak month for the sector with average returns, last 10 years average returns of minus 3.91% with 6 negative years and 4 positive years. April, though, seems to be a very good month for the sector. It might have to do something to do with the start of a new financial year, probably, and the average returns are very good of 10.43% with 9 positive returns and only one negative return in the last 10 years in the month of April. May, a flat year, I would say, for the a flat month for this sector with 6 negative years and 4 positive years. June, with average returns of approximately 5% with 5 positive years and 5 negative years. July, again, a very strong month for this sector with 6.77% average returns and 8 positive years and only 2 negative years. August, with an average return of 2.50% with 5 positive years and 5 negative years. September and October both are flat months for this sector, both with 6 negative years each and 4 positive years each. November, 6.3% average returns over the last 10 years with 6 positive years and 4 negative years. December with 3.31% average returns with 7 positive years and 3 negative years. So there are quite a few months in the year in which this sector does not perform good. For example, February, March, May, September, October. These are the months in which this sector actually performs quite bad, and only there are only few in which it performs good. For example, April, July, probably November, December too. At least it has given positive returns 7 times in the last 10 years, though the average returns is not so high, but still the number of times it has given positive returns in this month is quite good. Let's see the takeaways. The cheaper months: February, March, May, September, October. February, March, May, September, October. All of these months have given average negative returns over the last 10 years. August too does not has a very good average. January too does not has a very good average, but still costlier months are April and July. So April is clearly the best month for this sector with more than 10%, 10.43% average returns and 9 positive years in the last 10 years and only one negative. July 2 is a very good month for the sector with 6.77% average returns and 8 positive and only 2 negative years in the last 10 years. Finally, positive to negative month ratio. This is 1.14 is to 1, not a good value for the sector. This shows that against every one negative month, there are 1.14 positive months over the last 10 years, that is, over the last 120 months. So, that is all from my side in this video. Thanks for watching it. Please subscribe to the channel, like the video, and comment. I'll be back soon with another video. Goodbye for now.